Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the current developments in central banks with regard to yesterday's rate cut by the Bank of Canada. And of course, the expected interest rate cut by the European Central Bank. So that's about the two major news that are expected to be moving the markets today. So we'll be looking at the economic calendar, trying to understand other events currently happening in the markets. And once we cover these, hopefully everyone will trade from an informed perspective. So once you join in, kindly say hi on the live comment section. That is on Twitter or X, as well as on YouTube. And at the same time, if you have any questions arising from the presentation, feel free to type them in the live comment section. I'll be responding to them as we approach the end of the session. So as usual, I would like to issue a disclaimer that this session is purely educational. It is not investment advice. It is not a recommendation to trade. So always do your own research and practice proper risk management. So that being said, let's start with the economic calendar and try to understand what are the events that transpired yesterday and what are the events that we are expecting to see in the markets today. So yesterday being the 5th of June on a Wednesday, we had quite a number of things, including GDP coming in from Australia, which missed expectations. Then we had the ADP non-farm employment change, where the automatic data processing company found that the US private sector created 152K jobs, which was lower than expected. The expected number was 173K. Of course, the previous reading was 188K, which shows that the number of new jobs being created in the US economy is weakening. And this is something the Fed has been looking to achieve over the interest rate hiking period. So in this case, it was a big win for the Fed, which increases the chances that the Fed might be going for earlier rate cuts. So the big news of the day was the interest rate decision by the Bank of Canada, or the Central Bank of Canada, where it decided to cut interest rates by 25 basis points. So from 5%, now the interest rates are 4.75%. And then we had ISM Services PMI, which surprisingly came in positive. This is the only data that is moving against the Fed's expectations so far this week. All other data points for the US have been showing signs that the Fed might go for earlier rate cuts. So fast forward to Thursday, that is today, we have quite a number of things coming up in the day. So already we have seen an employment rate in Switzerland coming in at 2.4%, slightly higher than the previous reading of 2.3, which was also the expectation. So going forward for the rest of the day, the main focus will be on the European Central Bank interest rate decision. So we know that interest rates have been stuck at around 4.5% for a while, and we're expecting a rate cut to 4.25%. So in this case, you can see the rapid rate hikes that happened after COVID. So rate hikes basically began in July 2022. So from an interest rate level of around 0, we got to around 0.5 and then subsequent rate hikes until we got to this level of 4.5%. And in the last 6 decisions, the rate has remained stable at 4.5%. So in this case, with the European Central Bank closer to getting to the inflation target of 2%, we are expecting to see a 25 basis point rate cut that would drop interest rates to 4.25%. So make no mistake, it's not the same as Canada. Canada has already achieved its inflation target of 2%. For the European Central Bank, it hasn't yet achieved the 2% target. So the main confidence that investors are expecting the rate cut is mainly because of commentary from ECB members, where a majority of them have been in favor for a rate cut. So that's why we have this big expectation. So immediately after the announcement of the rate decision, there will be a monetary policy statement released. This will be to explain the interest rate decision. Of course, later on in the day at 3:45 p.m., we will be looking at the ECB press conference where the ECB chair, President Lagarde, is expected to issue a speech and, of course, a response to journalist questions. And this is expected to bring in a lot of volatility in in European equity indices as well as the euro. Besides that, there will be more news. There is the Canadian IV PMI. Then we also have the one more data point in the US job market, which is the weekly unemployment claims, which are expected to come in at 220K compared to the previous reading of 219K. So key focus for the day will be the European interest rate decision. And on top of these, there's a couple of other news that you need to check out. So on one side, yesterday, as at the close of the market, NVIDIA managed to surpass Apple and to become the second biggest companies in the world, right behind Microsoft. Also, it managed to join the $3 trillion club. It's only a very small number of companies that have ever reached $3 trillion in valuation. And that's literally Microsoft, now NVIDIA, as well as Apple. So shares of NVIDIA climbed more than 5% on Wednesday, reaching a record high of 1224.40 and giving the company a market cap above $3 trillion for the first time ever. So the stock's advance pushed NVIDIA's past Apple, making it the second most valuable company in the US stock market. Microsoft currently holds the top spot. So Wednesday's rally comes amid a broader gain in tech stocks with softer US economic data and a decline in treasury yields, boosting markets on hopes that the Federal Reserve may cut rates as early as July. So NVIDIA has been the poster child for investor enthusiasm in AI, which accelerated with AI's release of ChatGPT in late 2022. So the stock is up over 140% this year and 200% over the last year. NVIDIA shares have gained more than 3,300% in the last 5 years. Over those same periods, the Nasdaq has gained a modest 14%, 29%, and 126% respectively. So clearly, NVIDIA has been a big winner for the last 5 years. But this year is exemptional as the company is growing to a level that has not been seen before. And it's almost becoming the biggest company in terms of market cap in the world. So we'll be looking more on that, especially at US market open. So at the US market open, we could be seeing some more volatility in NVIDIA shares. So besides that, there's the issue of the sequence of US job reports. So the pay gap between job stayers and job changers narrowed in May in the latest sign. The US labor market is cooling from a hot start to 2024. So yes, we are seeing increasing signs that the US labor market is cooling off. New data from the ADP released Wednesday shows that the median year-over-year pay increase for job switchers fell to 7.8% in May from a recent spike of 8.3% in March and 8% in April. So the gap between pay gains for job changers and those of job stayers, which grew at a 5% pace in May, is at its lowest level since February and a far cry from 2022-2023 levels. So you can see how if you switch your job in 2022, you get a huge difference in pay with a high of around 16% in mid-2022. Then that gap has been narrowing, and now it's closer. Closest it has been in about 2 years, and this basically means that the job market is softening. So Richardson noted that the trend of fewer people leaving their jobs for a big pay bump isn't new, and she and other economists have been tracking the shift from the Great Resignation to the Great Stay. So job openings per unemployed worker hits lowest level since February 20. So we saw the JOLTS job openings coming in weaker than expected at around 8 million jobs. And that was also a sign that the US labor market is softening. So ADP showed much lower numbers, and now we are waiting for the major number which will be released on Friday, which is the official non-farm payroll report. So in this case, there is an expectation that the number will miss, and if it misses, it basically means that the US dollar continues to be weak in the markets. So besides that, if you look at the highlight, some of the highlights this morning include the following. One, ECB to deliver 25 basis points rate cut. That's the big news for the day. So European stocks rise, ECB awaited. Spain industrial output rebounds slightly in April. Germany factory orders unexpected to fall. Finnish trade balance shifts to deficit. Brent gains for second session. Australia exports fall to 28-month low. So looking at the major highlight for the day, like with this website, because it usually has very nice descriptions. So the ECB is expected to lower key interest rates by 25 basis points in its June 2024 meeting, bringing the main refinancing operations rate to 4.25%, the deposit facility rate at 3.75%, and the marginal lending rate to 4.5%. So this would mark the first reduction in these three borrowing costs since 2016, driven by a significant slowdown in inflation to less than half of last year's levels. So back in 2019, only the deposit facility rate was lowered. Traders will also closely monitor any hints of future rate cuts beyond June, especially after inflation accelerated to 2.6% in May, and with stronger than expected economic and wage growth. So markets are currently pricing in another 25 basis points decrease potentially in September or December. So policymakers are also expected to reveal updated economic projections, but significant changes are not anticipated. So this underlines the importance of the ECB press conference in today's news releases. So while we are waiting for the confirmation that indeed the ECB goes for a rate cut, more importantly, investors will be following through the ECB press conference to see if there are hints that the ECB might continue cutting in the near future, and that would determine a strong direction for Euro pairs. So that being said, I believe we can now jump into the favorite part, which is technical analysis. Try to understand what might be happening with the charts before we end the session. So good morning, J Squad. I can see Tony Dark in the house. Thank you guys for joining. Hi, Jason. Karel Shi, good morning, and thank you for joining. Then you can see Lamik Bure in the house. Thank you for joining. Waridi, thank you for joining and good morning. So let's get on to the next part. And in this case, I'll be looking to share my trading app, which is the MetaTrader 5 trading application. So right from the first chart you're looking at here, this is the chart of the dollar index. So clearly, we know that the dollar index has been weak, and this has been the overall trend. So we have seen highs that was last seen here. So this was back on when, just a minute. So highs on the 1st of May, as well as highs on the 17th of April. And since then, the dollar index has been generally moving downwards. And this is in anticipation that the Fed may actually start cutting rates. So after the big sell-off last week, this week has been a story of an attempt to recover. We saw the Monday being further bearish, but then Tuesday, market attempted to bounce twice. Were right at open and towards midnight. Then on Wednesday, the dollar index attempted to continue pushing higher, but then failed towards the end of the day. Today we dropped further downwards, and now the market is recovering. So using a smaller time frame, let's say the 15-minute chart, we can summarize the week this way. This is what we are currently seeing with the dollar index. And if you want me to remove everything and make it clearer, this is what we're experiencing with the dollar index. So 15 minutes chart, this is the price action of the last 2 days. And with the exemption of Monday, where on Monday we had this big sell-off here. So it's more like an inverted flag. So we have been trading inside a flag. So today we started with a downswing, got to the lower trend line, and then an upswing. And the overall expectation is that the dollar index continues pushing higher and potentially gets towards the upper trend line. So in this case, we are seeing a recovering dollar, and we could be seeing the dollar being pretty strong. That is for the dollar index, especially if one of the top weighted currencies in the dollar index, being the euro, happens to be weak for the day as a result of the interest rate decision. So yes, the euro USD started with a strong bullish momentum earlier in the day, but then from what we are seeing here, there seems to be some signs that the market is changing direction, and a change in direction is good, especially considering that the market is overall expecting some form of a rate cut later today. So looking at the price action from Monday, this is Monday, Tuesday, Wednesday, Thursday. There's also Friday last week. We seem to be having this trend line that is acting as support. And if you look at the highs for those different days, it seems like the market was having this kind of momentum here. But then, judging from the last 3 days, from this high to this high to this high, it seems like the market is being or is failing to form newer highs. So without newer highs, it simply implies that there's a potential that the market eventually pulls back downwards. And that could happen later in the afternoon once we get the ECB news. So what are the case scenarios for both outcomes? Remember, it's not a must that the euro or the European Central Bank goes for a rate cut, but if indeed it does, I would be more interested with this level as a potential entry point or decision point. So if we happen to see a big break here, then we might be interested in this area here as a potential target, where the price could potentially make a huge drop to 1.08110. But then also I will be paying special attention to this area here. So if for some reason the ECB decides not to go for the rate cut, then we could be seeing the euro making a good rally and getting to 1.09147, which is the highest price for the week. So we will be observing the price action around this area, and of course, it's not wise to make a trade before the news announcement. So it's always much wiser to wait and then trade from an informed perspective. So other currency pairs have not been doing particularly well. For instance, the dollar against the Swiss franc, the dollar has been pretty weak. Eventually broke this lower trend line on the 4-hour chart. And now, after breaking that lower trend line, we are seeing the market begin to make some sideways momentum. So since yesterday's high and low, we can see that some form of pattern is emerging in USD Swiss franc. So it's more of a sign showing that the market is consolidating, doesn't have a strong directional movement. So it's more or less like the price is just moving sideways, which means that at some point we should be expecting to see a breakout, and opportunities may arise if the market makes a so far, for now, nothing much is happening in USD against the Swiss franc. So we wait to see which direction the market breaks, and that would potentially present a trading opportunity. So pound was pretty strong against the dollar, kept moving higher. We found this area here, which was very strong resistance, and somehow the market has been unable to break that area. So from the 1-hour chart, you can notice there has been 3 attempts to break in above this area here, but every time the market gets within that zone, is unable to break, and now we are seeing a pullback. So with a strong dollar index, it's more meaningful to assume that the market would retest yesterday's lows. So notice how today the market opened, pushed for a new high, but did not manage to go for a high which is higher than the week's high. And now seeing the price pulling back, it means that the parameter to start working with is on the lower side, which is yesterday's low. So for any form of intraday trading, having seen the market erase all the gains, it means that we are now on a swing that could potentially reach 1.27551, and this is based on the price action of yesterday. So we have already seen the dollar index being pretty strong, and from the sequence of candles we are seeing, especially during the Tokyo session, is only illustrative of further strength in the dollar, which means that we could be seeing further downside momentum down to the previous low. So New Zealand USD continues in this loudspeaker, or call it a horn kind of formation. And now with all this market activity, we saw the market hitting this high here and immediately forming a very nice book pattern, a shooting star, bearish engulfing, and now we are seeing some further downside momentum, which means that now we expect this market to be headed much lower. So without being overly aggressive, I would be very interested in these two levels here. So yesterday's low is also this resistance here. So you need to connect these two dots. Understand that this area is of significance in this chart, and that the current bearish momentum will potentially head here. And if it happens to break, then there's still more support around this area, which was the previous low here. So we should be expecting to see some activity right now towards this point and potentially lower, especially since this move is backed by a very strong dollar. So the dollar is pushing again for the USD card. Remember, we had this breakout yesterday, but then the breakout didn't last for long. On the 4-hour chart, it's just a tail on the upper side. On the 1-hour chart, yes, there is an attempt to move higher, which was faced with downward pressure immediately. And this was the reaction after the Bank of Canada decided to cut interest rates. So they cut interest rates by 25 basis points to 4.75%. So the US dollar made a big gain against the Canadian dollar, but then immediately went back into pattern. And remember, this is a pattern we have been tracking for a while. So in this case, it only implies that it did not weaken the Canadian dollar as much, or the US dollar was pretty weak against other currencies. So now we are seeing the strong dollar this morning managing to make another comeback. And in this case, we could potentially see another break around this area here. So for intraday trading, I expect that the price will at least get to this area here. But then for entries, I'll be more interested if there's a break above this area. So if there's a break, then that would mean some further dollar strength, some further Canadian dollar weakness, which would mean identifying a nice opportunity here. But since it hasn't happened yet, so we remain positive. Of course, it's also important to consider this area here. So even if we get a break, it may not go as far. We could be seeing the market going for this. So for Australian dollar, we are seeing a very strong reversal after the market got to a major resistance area here. So this is what we experienced yesterday, this morning. And now immediate reversal, erasing all the early morning gains. Of course, we know that this is a very important area here with multiple tests of this support. So in this case, for intraday trading, we expect some very short-term momentum towards this area here before we observe the price action to see whether there will be a bounce or break. So USD JPY has been one of the wildest performance this week, with a big sell-off at the beginning of the week on Monday, a very strong bounce, which we identified. So we identified this bounce here. So on Tuesday, on Monday, we had the breakout, Tuesday, a further drop, Wednesday, reversal. And today, being Thursday, we are seeing some further upside. So there's a certain price action level I want you to notice. And this is the position where the market had the second intervention from the Bank of Japan. So the second intervention happened at 158.019. So the most recent swing downwards started at this level around 156.769. So now that the market is making a recovery, those become some nice targets. So the most recent swing here, the highest we had was 157.691. So all the horizontal lines have some level of significance. So for the short run, today we expect to see the price hitting 156.769. If that level doesn't hold, then we go for 157.691, and that's not the end. There's still more room for upside, with the price expected to even hit 158.019. So backed by a strong dollar, we are seeing the yen take a step backwards. So silver was pretty weak yesterday, but then towards the end of the day managed to make a comeback. So today we have seen silver attempt to push even higher, and I believe this is in correlation with gold, but then the overall pattern is indicating bearishness. So notice the M formation here, which is basically a double top. So we have talked about this before, and eventually the market made a break below the neckline. So this break happened here. That was on Tuesday. So market pulled back, and today even pushed higher. But then we know that now we have a different kind of understanding of this market, because the lows are now getting lower, which is indicating that this may be the new trend for silver. We could be seeing some further pullback on this price action. So from the 4-hour chart, this is how it looks like. And as we all know, anytime you get such a double top, you wait for the break of the neckline. Even if there's a pullback, we are also anticipating that the price has changed the direction and might be headed much lower. So even if we had this rally yesterday and today, there's a good chance that we will be seeing price moving further back downwards. So as for gold, we happen to be in this inverted, I would call it an inverted flag. So yes, the market is making these huge swings, and now you're expecting this swing upwards. So in the inverted flag, this is how it looks like. So if you are to consider this as a flagpole, from this point down to this point, then the flag appears between the two black trend lines, with the breakout happening yesterday. So after we got this breakout, notice how the market accelerated even higher. And now we're seeing the market pulling back downwards, which means the 2352 price action level is a nice target for a potential play that involves break, retest, and continuation. So market makes a big break, pulls back for a retest, and then makes a continuation. So in this case, I wouldn't be surprised if this played out, because we already have a clean break here, and we expect gold to at least make some form of recovery. So for now, if you're a price action trader looking to make some intraday swings, then gold erasing all its earlier gains is the only play here. So you expect that gold will just simply move back and get to its previous breaking point. So the breaking point is 2352. So after we saw this big rally yesterday and today, now the expectation is that this pullback at least extends to this area here. So for Brent oil, we saw the same pattern of the horn or the loudspeaker being played here. And after the big sell-off, at some point investors started being concerned that oil prices are now cheap or discounted. So we saw a 9.37% drop in oil prices. And then yesterday we had some good recovery, and today it seems like we are continuing with the same ethos of market recovery. And the most recent low was right here. So I'll be sharing some of these. So the potential target for today, as oil continues making a recovery, is around $80.422 per barrel. So next part, US equity indices. Apologies for that. Can you confirm if you can hear me clearly? I'm seeing a comment saying my sound is breaking. So US equity indices, we had the S&P 500 making a very strong rally yesterday and forming a new all-time high. So as usual, we know how to do this. So after seeing a new all-time high, you don't have any candlesticks on the left. Basically means that you're trading blind. And now that was the all-time high price that I just marked. And now notice what happened. So on the 15 minutes chart, we have the same idea here. So market makes a breakout, forms a new all-time high. Then later on, goes back to retest the area. And now we are looking at a potential continuation pattern. So from the 1 hour chart, this is how it looks like. So in this case, I'll be looking for bullish positions. And the market is as bullish as ever since all the data we have seen this week, except one is in favor of an early Fed rate cut. So in this case, having seen the current pattern and the expectation in the market, so when it comes to setting a target without candlesticks on the left, as we mentioned earlier in the week, we go for the most recent swing. Notice how the market found resistance, went back down and then up. So then we use that difference between the swing low and the neckline or the resistance here, and then use that as a target. So in this case, for the S&P 500 index, the new target will become 5,500. So we should be expecting to see another leg up, targeting the 5,500 price level. So US30 still staggering, not making a very strong rally. So while we could be expecting to see some form of creation as US equity indices continue to recover. For the Dow Jones, I don't know whether it's the best asset class to be going for bullish positions compared to much stronger indices or indices having much stronger trends. So notice how it's still far from its all-time high. So we still have this M formation in play. So I'll be pretty patient on this one, especially considering that the top performance of the S&P 500 and the Nasdaq is driven by big tech, which mostly are not constituents of the Dow Jones. So the Nasdaq formed a new all-time high yesterday. So there was a very strong rally. If you look at the performance, right from the open to the close of the day, you are up over 2%. And today the market seems to be halting. So we don't have much of a price action here. So I'll be patient, wait for the London Open or the New York Open to see whether there will be a big impulse in price. Remember, we don't have any candlesticks on the left. The price has broken above the previous high. So this is the new all-time high, and at some point, I expect to see some form of expansion of the trend. But also remember, it's very common that the market eventually makes a pullback since this was a breakout. So breakout, retest, continuation. So that's still in play. So we could be seeing the market going for a retest and then a continuation, and that would present a nice entry point. But then if this doesn't play out, then we just keep observing this sideways movement. And if there's a break, then we might consider going for bullish positions. So Bitcoin made a break last week, attempted to move higher. So the previous high here was 71,976. So yesterday got really close to that area, pulled back, but the bullishness is still there. So there's more net inflows for the ETFs. There's more ETFs beginning to trade, especially in Singapore. So we should be expecting to see some further upside momentum. So NVIDIA forming a new all-time high at 1218 was quite surprising and surpassing Apple. So natural gas futures are also attempting to make a recovery. We have seen Brent oil also making a recovery. So in this case, it seems more likely that we could be seeing some further upside potential. But then judging from the current price action, it seems like the market is struggling to break that resistance. So the resistance is based on this sequence of highs from last week and in the previous week. So from the 1 hour chart, this is how it looks like. So market really failing or struggling to break that area. So in this case, we are still on an upswing, and potentially we could be seeing the market eventually completing the journey and getting towards the upper trend line. Then for high grade copper futures, still further bearish momentum. So this is what we are seeing. So after a very strong month of May, now we are seeing a very strong bearish momentum. and this is seemingly accelerating. So it seems more likely that high-grade copper futures have been moving further downwards with increased momentum, but at some point we should be expecting to see some form of break. And once the break happens, then it could present us with an opportunity to go long yet again. So CAD JPY are also making an impressive rally after yesterday evening's sell-off, meaning that the Canadian dollar is recovering despite having those rate cuts. So the Japanese yen seems to be pretty weak. So after making some good strength for 2 consecutive days, yesterday we saw currencies recovering against the JPY, and the Canadian dollar is no exemption. But now we are facing an area that was previously a support, now turned into a resistance, and now we observe the current price action, the close of the current candlestick, to see if the market actually goes back or makes the break and goes for the previous high at 114.8. So European equity indices, the Spanish IBEX is making some good rally after having recovered, and we could be seeing the market going for a new all-time high. So remember, all these markets that share the euro, if they get rate cuts later in the day, then we will be expecting some bullish momentum. So we could be seeing the Spanish IBEX going for a new all-time high. And this is the same for these other equity indices. So for the Euro 50, we could be seeing, yes, another all-time high being reached somewhere around here. As for the Euro stocks. So French 40 index has had a very strong bearish momentum, but now we are looking at a potential break here. So in this case, the idea of the market going back downwards might not play out. And now we are observing this area to see if there's a break. And if the market breaks above this area, then the idea is that the market continues moving higher towards the next high. And in the short run, we should be expecting to see a rally towards this area. That's 8,143. So FTSE or the UK 100 index seems like our chart of the day. So yesterday, we were not sure where the market could be headed next. Now, we are also not sure, but what we are seeing is something that has been quite consistent for the week, where we have had a support area around this region here. And every time the market got to that area, found support and made a strong bounce. So right now, we are looking at a market that just made a pretty strong bounce from this area and is headed higher, meaning that the recovery efforts continue. And in this case, looking at the highs we have seen over this week, there's a good chance we could be seeing some good rally from this point onwards. So this would be my chart of the day, the FTSE 100 index or the UK 100 index. So the German DAX made quite a good rally yesterday. So we already broke this area here. We broke this area, and now it's just hitting the upper trend line. And there seems to be an immediate reaction after the market got to this area. So we'll be observing this furthermore for the better part of the day to see if there's actually a break or if the market bounces from here and we head back downwards. So that's it for the day. I hope you guys enjoyed the session. So if you're new to these sessions, make sure to check out other sessions. So these sessions happen every day, Monday to Friday, and we basically focus on the key events for the day, technical analysis to try and understand where the markets might be headed next. So if you're new to trading, make sure to check the link in the description below to register for a trading account. And of course, if you are just learning how to trade, check out the Novice to Pro series available on the FX Pesa YouTube channel. So we have new episodes coming up on the Bullish Banter podcast as well as the Financially Incorrect podcast. So make sure to check for that on all the podcast platforms. So also remember to follow our Bullish Banter handles on social media on both Twitter as well as Instagram. So we'll appreciate that. If you're watching these on TikTok, Sorry, if you're watching this on Twitter, make sure to leave a comment and share your response. If you're watching this on YouTube, remember to like, subscribe, and share with other communities. So there's a good question on Fibonacci levels. Hopefully, we'll be able to cover it on a different date. So I'll check on that because our time is already up and try to give some feedback. So adding dates on videos like old videos, we'll consider this. I don't know how much impact it has on our graphic design, but we'll try. So thank you for the feedback, Lamik Buire. And with that, I don't think there's any other question. So thank you very much, guys, and I hope to see you on the next session.